Hey, and here we are with the MHP Show podcast. I'm your host, Derek Vickers, and we are here today doing our first episode. Now, this is going to be a lot of fun. This is going to be a lot of fun. First episode today, if you saw in the notes, is that what Chat GPT told me about mobile home parks and why I should invest in them, and my opinion about what Chat GPT told me, because it's kind of funny what it said in a way. I agree with some of the points, but not all of them. And so we're going to get into it today. And so I hope you all enjoy as I give my opinion and hopefully drop some value and some knowledge regarding mobile home parks. And so let's just go and get straight into it here. So the first of the 10 reasons that the AI told me and why it's good to invest in mobile home parks. One is high cash flow potential due to low operating cost and high rental demand. Okay, so partially true. I would say high cash flow potential. Absolutely. Potential. Low operating cost. Could be. Could be. Unless you have a problem. Unless you have utilities go out on your park, which we're going through right now. We have a wastewater treatment plant at one of our parks. And I've been going back and forth with the Department of Environmental Protection and engineers and contractors and blah, 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 blah. In this project, we haven't even gotten like a legitimate quote on it yet. So it's going to be anywhere between 75 and, I hate to say it, but $200,000. Now, that would not be considered a low operating costs. Now, if you're just looking at taxes, insurance, utilities, trash, water, yeah, relatively low compared to other assets. Stabilized park, you're going to be running at 25%, 30%, 35%, depending on many factors. So I would say that is somewhat true. The AI gave me a reasonable answer there. So we can agree with that. High rental demand, we know that. Look, if we have a house come available in Tampa, Florida, like we'll sell it the next day. And so depending on what market you're in, you're going to have a higher demand than other markets. But the more I'm doing market research on these different markets, there's high demand, even in markets that you wouldn't think would have high demand. So even some of these secondary and tertiary markets, and look, I know some of them probably suck, but I've done some market research and some test ads in some other areas that I've been looking for properties. And I'm like, man, there's actually some demand in some of these markets. Do I like them? No, not really. But there's a lot of demand for this stuff because we're the cheapest place in town, no matter really where you go. So I would believe that. So moving on to number 2 here, a stable source of passive income with long-term tenants. Yes, absolutely. We all know that. We've got Johnny in Lot 6 who's lived there for 36 years. His house was passed down to him by his, I don't know, by his family or whoever it was. So it, yes, can be a stable source of income. I would actually mark out that passive letter there because but we all know that this investment isn't necessarily passive if you are operating it. Now, if you're an LP and you're investing in a deal, yeah, it's passive. It's passive. But if you're an LP out there and you don't know what your operator goes through on a daily and weekly and monthly basis, and the property managers go through, what they're doing is very far from passive. Now, I guess you can buy a one-off mobile home park. You got a 9-to-5 job, which is fine, by the way. It's fine. You can buy a mobile home park, stabilize it, and it's not going to be that much work for you to a degree. It's like the first park we bought, it was 22 lots. It was originally 15 minutes from my insurance office that I used to run. And it was a disaster at first. Maybe you've heard this when I've been on other podcasts, but it was a disaster. And now this park it's good. I mean, there's not really many problems, but someone has to be there. So there's still going to be things, the septic's going to overflow and they're going to call you and complain and say poop's coming up through the toilet. And I just got a text on this over the weekend. Now, look, I still get texts from residents at this park because I have a burner number on a Google Voice number, and I still have it for whatever reason. And I'll get texts from the tenants there because I was literally managing that property on my own with no help. It was far from passive, but I will say now after, we're coming up on 2.5 years since it's, yeah, 2.5 years since we acquired that property. And it's relatively passive at this point. So I could believe that to some degree. Okay. Number three, diversification of investment portfolio with a tangible asset. Yes, look, I guess this may be referring to something maybe from, if you're just an investor and you're an LP from that perspective. Yes, it's diversification of assets. But in my personal opinion, I only want to invest in tangible assets. I hate the stock market. I hate it. It's just volatile. To me, it's not necessarily real. People would argue, yes, you earn a piece of a company, you're holding a piece of a company, and that may be true. But I just don't trust it because it just doesn't make sense. I mean, the stock market now is just based on what we believe a company to be worth, its future postulated value out there. So, look, I'm just not a big fan of that. So, yes, I guess it can diversify your investment portfolio. So, we're going to number 4 now, potential for value add opportunities through property improvements. So, it's potential for value add for sure. Value add opportunities, 100%. Every single park that we bought in these last 2.5 years has been extremely value add. I'm telling you, extremely value add. Now, the park we purchased, one of the more recent ones that we purchased, was a 72 space park. We paid for it, probably paid too much for it, but it's a stable asset. It's a nice park. But most of the stuff that we were buying was junk. It was going to be scraped. These properties were going to be scraped. There was going to be a nice industrial building or some multifamily built there. Maybe not this year or next year or the year after that, but in some way, shape, or form, that was going to happen. So these properties were going to be gone. We came in with 6 to 12 months of hard work, nasty stuff going on. It's crazy. You buy the park, it wasn't taken care of. There's drugs, there's crime, there's bad people, and you got to clean all that up. You and your team got to clean all that up. And so you can add a lot of value to these properties by doing that, but it's hard work and a lot of people don't want to do that. A lot of people don't want to roll their sleeves up, but there is a lot of value add opportunities still out there. So I would agree with that one. Now, you may say if you're just getting into this business now, you're like, oh my God, there's no more opportunities out there. The prices in Florida are crazy. Yeah, and you're not wrong about that. The prices in Florida are pretty insane. They're pretty insane. Or if you see one, I think it was a couple weeks ago, I saw a deal. I'm like, oh, okay, it's 50 a pad, and then around Tampa, and then you look at it, oh, it's there's hair on it for sure. And I know you people that buy in the Midwest are like 50 a pad. Holy shit! Like, oh my God. Yeah. It's a different world down here in Florida, dude. I'd probably put just about anything under contract for 50 a pad around Florida in a relatively decent market. Now, I'm not in freaking Arcadia. We were going to buy a deal in Arcadia one time, actually. It was in a portfolio, but we didn't close on it. But there are still a lot of properties, especially in markets with value add opportunities. Now, if you don't want to deal in messy stuff, if you don't want to deal in private utilities, if you don't want to deal in park owned homes, there's probably less of it, but there's still, there's still properties out there where you can come in and add a lot of value and really make a difference in the community. And that's what's really cool about this business is that it's a win-win-win situation. You're helping the properties, you're bringing them back to life, you're helping the tenants, you're helping your investors, and you're adding value in that, and you're helping you and your team at the same time. So everyone wins in this business. Lots of value add opportunities. I would agree with that. Number 5, less competition in the market compared to traditional real estate investments. Yes, if you're comparing to multifamily, there's probably less. There's probably less competition than there is in multifamily. I mean, I'm looking at these freaking duplex deals around Orlando and Tampa, and I'm like, shit, dude, it's freaking. There was a bandit sign posted, duplex available. It was like $487,000, and it's not even in that great of an area. You can at least buy, depends on where you're at and how crazy the seller is now. But look, you can get multiple units of that for $500,000 in Florida. I mean, I've seen deals up in the Midwest $500,000 for, 40 lots or 50 lots. I haven't messed around much in the Midwest, and I've been doing some market research on the Midwest to kind of see what those markets are actually like, and I like what I see. So potentially here in the future, there's investment opportunities there 100%. I would say that there's definitely probably less market competition, but there is definitely increasing market competition due to bigger money getting into this industry. I mean, there's tons of private equity shops, there's tons of these big money groups coming into this business because they're seeing the stability of this asset class, because this asset class in theory should be 100% paid when it's 100% tenant owned homes. Now you may have a couple people that pay, to pay late or whatever, but in theory it's going to be 100% collected on a monthly basis. So enough of that. Let's go to number 6. And I touched on this a second ago. So number 6 is lower entry barriers for investment due to lower purchase prices compared to traditional real estate investments. Yes, I would agree with that. And that's the reason I got into this business anyways. It was one of the main reasons because it was a lower barrier to entry. I bought 22 lots for $425,000, is 20 couple a pad. How much is a multifamily deal? 22 units. I don't know, a couple $1,000,000, depending on where you buy it. I mean, it's a couple million, 3 million, $4 million, depending on where you buy it. So there's definitely a lower barrier to entry. Now, I will say this, in certain markets and larger MSAs where there's more people going after those deals is driving down the cap rates. So the cap rates, I mean, even here lately with all this bank shit going on, like, oh my God, like the cap rates have not moved in Florida. They haven't moved. And I just haven't seen it yet. There's still deals with numbers that are just insane. And, maybe there's a big group that can come in and just take it down cash, more power to them. And we're all going to do this in 5 years. I guarantee you, we're going to come back and say, damn, we should have freaking bought everything that was around in 2023. I remember when I first started hunting for deals in 2020, I was calling people and like, they were telling me 50 a pad. And I'm like, man, you're freaking crazy, dude. Like, who's dumb enough to pay that number? Who's dumb enough to pay that number? And now I'd buy anything in those markets at 50 a pad. Anything if it was over 20 lots, of course. Yeah, so essentially there is a lower barrier to entry depending on where you're buying, of course. Look, Chat GPT isn't wrong about some of this stuff, okay? So I like to a degree what it spit out for me. This is an interesting concept and thing for me to mess with. So let's move on to number 7. This one is sort of funny. Less maintenance and repair expenses compared to single family homes and multi-unit apartments. I was just telling you about the wastewater treatment issue that I was talking about here. And it's like, okay, dude, you ain't going to have that expense with a house or multi unit apartments because most of your multi unit apartments are on city water and sewer, I think. I think I would disagree with that because I think there's been a misconception that has been put over this industry because people are like, oh my God, mobile home parks, there's like no expenses. All you pay is insurance and taxes. And yeah, that sounds great. And then someone buys a park with a well. The well goes out, because of code and regulations. The well can't be that close to the septic. It can't be close to the wastewater treatment plant. So they can't drill a well here. They can't drill a well there. Okay, they can't drill a well on the property. Now we have to tie into city sewer or city water, which is 3/4 of a mile away. How much is that run going to cost? 750 grand, $1,000,000. I could go off onto other areas with this, due diligence and checking things. But I would definitely say that that's false with less maintenance because even, and I've made a couple posts about this, is like if you've got city water and city sewer, you are not in the clear, dude. You're not. You're not. The properties where we have city water and sewer, they were developed in I don't know, dude. I'd have to look in the late 50s, early 60s. Dude, these pipes are freaking terrible, dude. If a truck just touches them, they freaking explode. And I think in these first 3 acquisitions that we made in Tampa, I think with between water lines, sewer clogs, and all kinds of other shit, we would have probably been better off to just frickin' replace that in the beginning. We should have added it to the CapEx budget and replaced it in the beginning. And, things that you know now. And so less maintenance, I guess it could be. We've got a park that's literally direct billed everything: water, sewer, trash, electric. And I'm not quoting on this, but our expense ratio is still, it is what it is. Now we have an office there and a pool, so that accounts for that. It's a big part. So less maintenance, like, guys, I'm telling you, like, yes, there is less maintenance on this, but like these old infrastructures, and now they're getting to the point where they're, these parks that are developed in the 60s and the 70s, even 80s, these infrastructures are 40 or 30, 40, and 50 years old. So you have to watch out now because, more than likely your expenses are going to be higher than you think that they're going to be. I 100% guarantee you that they are going to be higher than you think they should be. Number 7, I don't agree with that. I do not agree with that. Number 8, government regulations and zoning laws provide additional stability and protection for investors. Now, if there's any experienced operators listening to this right now, maybe there is, maybe there isn't, you would probably chuckle at this one, because if you're just getting into this business and you don't think you're going to have to deal with code enforcement or something, you're wrong. So in the beginning, like, I honestly, like, I was so excited to get into the business. I didn't even know code enforcement existed. I shit you not. Like, before I got into the mobile home park business, I thought code enforcement was like, dude, I didn't even know what it was. And then I get a call one day because, we put a fence up, and whoever we hired to put the fence up didn't pull a permit. So I got, a notice in the mail like, oh my God, you're going to have to go to code board and all this. And I'm freaking out. I'm like, oh my God, what I do? I don't want to call the person. I think I'm in trouble. I don't know how the hell to handle this. Turns out it's just something you're going to deal with in mobile home parks, man. I mean, you're going to deal with code enforcement. You just got to take them down fast, become friends with them and take them down fast, take down their, get their violations, take care of them quickly, communicate with them. The worst thing you can do is not communicate with them. But the government regulations typically are not on your side. I think what maybe this is really trying to say is that the zoning laws, because everything is great, your grandfather then, you have protection because they really can't do anything really to your park that they hate and they don't want there and they hate looking at every time they drive by and all that other stuff. If you're at a really crappy city and they're trying to find ways to get rid of you, which could happen for sure, probably not going to be on your side. So I would definitely disagree with that one. Like, they got to fix the freaking AI because it's spitting out dumb answers. Okay, so number 9, ability to invest in mobile home parks in various geographic locations. So I don't understand this one. Yeah, of course you can invest in multiple different locations. And maybe what it means is that you can operate these things from, different locations around the US. You don't have to be in a certain place. I mean, I know people that live right down the street from me that operate nowhere close to here. And maybe that's what it's talking about, because I know there's tons of people that do this, but I haven't actually been directly involved in, like, as far as like the Midwest or, Texas or California, but people do it. So maybe that's what it's talking about. And we will start doing that. We will invest in other states and we will expand. All right. So the last one here is we're coming around the corner. So we've got number 10, positive impact on the community by providing affordable housing options for low income families and individuals. Like, look, guys, this is why we do what we do. We're the cheapest place in town by far, especially in these larger markets. We're the cheapest place in town. And you give people the opportunity to own a home in one of your parks that they can call home and feel happy about it. And you're cleaning up this place. Like, man, I was at the park the other week, one of our parks in Tampa, and this guy, he's a veteran. He's a great freaking guy. I talk to him all the time. He's, probably drinks a little too much, whatever, but he's a great guy. Really, really good guy. He's a Vietnam veteran. And I was just talking to him, and he's like, Derek, man, I really love what you guys have done to the park. I'm like, really? Mitch, what do you like here? And he's like, man, I love these lights that you guys put up. I love these lights because there used to be riffraff. There used to be random people cutting through the park and using it as a throwaway. And now they're not. Now I know because our lights kind of dim. And when someone walks by them, they, get brighter. He's like, I love that. It just makes me feel safer. Now think about that. Like how much value you're adding to someone's life by putting something as simple as lights in. This is a 70 space park. We've got 63 occupied in there. We probably put up 12, 15 lights, maybe $1,000 each. It's not cheap, but you're providing value. I mean, this place was freaking pitch dark when mom and pop owned it. Actually, this park was owned by mom and pop. It was sold to a guy who didn't know how to operate. And he sold it to us. He thought he was taking our heads off, by the way, but we actually knew that he wasn't. And he wasn't doing anything to the park. I mean, he was a fix and flip guy. He was moderately fixing up the park owned homes. He had 120 units and, there was, I think, 50 occupied and the rest of the park owned homes were just dogs. So he wasn't doing anything to the park. So he was basically trying to, fix and flip the mobile home park. But just that little thing and the value it provides to the residents, or even just, paving the roads. You're coming in and paving the roads and you're just adding so much value to the residents and getting the people out of the park that are doing illegal things is a value to the residents. It is 100% a value to the residents. And you like to do this to where what you're bringing into them, like when they come home in the evening and they're there all day, they want to feel proud of the place. And now I know people in this particular park feel proud to live where they live because in this park, in the back row, there's probably, I don't know, 9 or 10 homes back there. They were all vacant. They were all vacant trash, homeless people in them and all kinds of stuff. And now they're all fixed up and they're fine. And there's people living in them. And just those little things of CapEx, and that's probably, we probably spent 60 or 70 grand on the roads, 15 grand on the lights, another 20 on the fence. That was probably the most expensive amount of CapEx we did. So let's say 100 grand on a park that, the value is probably double or more what we paid for it. That's a good investment. And I've got countless people that have came up to me and like, wow, this park is so quiet. And even when I go, like this park is in the middle of a not so great part of town in a large city. And there's all kinds of crazy stuff going on around this particular place. Trust me. Trust me. And you go into the park and it's just quiet and you feel good and you can walk around and it's not like when we first got into it. It was a little, sketchy. Not gonna lie. We'll sketch you when you went in there. And so those are the 10 things. Those are the 10 things that Chat GPT, the smartest piece of AI, or allegedly the smartest piece of AI in the world, told me the 10 reasons why I should invest in mobile home parks. You can agree with them. You can not agree with them. Some of them are true. Some of them are not true. But there's more to be added and more that needed to be said about these things. So look, this is the first episode. I'm going to conclude the first episode. I hope I didn't ramble too much for you on that. I hope you got some value out of it. So we're going to do these every couple weeks. We may have a guest on. I may have a co-host on one week, or it's just going to be me talking. It's going to be me talking and running my mouth. I'm going to, digress 1,000 times, I'm sure. But that's okay. It's a podcast. It doesn't have to be perfect. And, please subscribe, drop some comments below. Let me know what you think. If there's anything that you want me to talk about, I'd love to help you. You can reach me on all social media platforms at Derek Vickers 885 on Facebook, Instagram, Twitter, TikTok, LinkedIn. I write articles on Substack. So I'm everywhere, dude. I'm everywhere. And so, look, I'd love to connect with you. I'd love to, if you have questions about a deal that you're looking at, I'd love to take a look at it. So you can reach out to me. My email, you can email me at derek@victoryrealestategroup.com. That's derek@victoryrealestategroup.com. So look, I hope you guys have a great one, and I will see you on the next episode. Peace.